Hello, my name is Jason Strongerhead. This coming week, right? Do you think we need to brace for impact? The market is ready to collapse. But when I say collapse, how low are you going to go, right? Okay, let's take a look at the market. So, last week I mentioned that there's a line of defense. Now, this line of defense, this particular support cannot break. So, if it breaks, right, then there's a very high chance that the market is going to go down because, right, before the market before the market goes up high, okay, it actually tests this particular level for a couple of times before it breaks. Once it breaks and breaks with conviction, that means we know that the market is going to go up, right? Okay, so at the moment, this act as a very strong level of support. Okay, so at the moment we are really at the level of support. So that means, right, if it breaks, the next week is going to be very crucial for the stock market. If it breaks and never go back up, then I probably is going to go down further lah. Okay, so let's take a look at the NASDAQ. NASDAQ, same thing. There's a level of support over here, right? So do you think the now S&P is really a support? NASDAQ haven't hit support yet. So do you think NASDAQ will hit support? Yeah, probably may go down a little bit more because some of the tech stock is under pressure, right? For example, Facebook. Okay, Facebook is under pressure and it's probably gonna go down somehow. So it's probably gonna test the support. There's a high chance that we don't know. All right. So if let's say Nasdaq gonna test support and S&P gonna break support, then or both gonna we have to see whether the support holds or not. Okay, if the support hold, that means, right, there's a first scenario. Scenario one will be Nasdaq would go down to test the support. That means, right, S&P 500 will break support. Okay, break already. If it bounce, that means this will be a false alarm, and then after that, it will go back up again. That means there's going to be a strong rebound coming up. Okay, so that could be a possibility, right? Now the second possibility will be then it will go down a lot more lah. Okay, so whether is it going to go down a lot more or whether is it going to hold will depend, right? Okay, there are two reasons why I believe the market may go down. Okay, I'm not saying the market will go down. I'm a very positive person. I think the market is always up in the long run. Yeah, but what would be the short term reason why the market may go down and may break the support, right? Okay, so over here, the first scenario is because of the coronavirus. Now, the coronavirus is going up and is going up higher, and because of that, that's a worrying sign. Now, why is this a worrying sign? If you look at my previous video, I mentioned that because of the previous pandemic, right, is there a chance that there will be a second wave? There will be even a third wave. The chances is there. So because of that, right, people are worried that this coronavirus, there will be a second wave and it will hit the market, right? Now, why when it hit the market, it is a worrying sign? Okay, it is because people are worried that there could be a second shutdown. So because of the coronavirus, right, is not as deadly compared to the previous pandemic. Now, I'm not saying it's a good thing. Okay, I'm not saying it's a good thing. I'm saying that it's not as deadly. Why it plunged so much, right? It's because of the economy shutdown. Now, when the whole world economy shut down, because when economy shut down, business activities will be impacted. Once business activity will be impacted, then what happened to the stock market? It will then go down. Okay, and if let's say, right, the second wave hit, it will depend whether the economy will shut down again or won't shut down again. Okay, if it won't shut down, so I believe, right, we will not test the bottom. Now, if it does shut down, I believe it will not only test the bottom, it will go down even lower. Okay, so it will really depends whether the second wave hit, whether it will hit or it won't hit first. That's the first thing, right? Second thing is if it hits, will there be a shutdown or won't have a shutdown? Okay, so that will determine whether the market, how low can it get if it really breaks the support. Yeah, so that's the first possible reason, right? Second possible reason is the election. Okay, because of the election coming, then if you look at it, now I'm not pro Democrat or pro Republican. I'm a super neutral. In fact, I'm just a Singaporean, right? Okay, some people say I'm just a stupid Chinese in Singapore trying to do whatever shit. It doesn't matter. Yeah, you can say all you want. I'm just sharing my opinion here. I'm sharing some stats. Now, based on the stats, right, if you look at it, if the Republican wins this year, then it's good for the market. Okay, normally, based on historical numbers, right? If the Republican lose the election and the Democrat is going to be re-elected, then newly elected, not re-elected. Okay, it's not going to be good for the market. Okay, so because of that, right, the market now it's worries so many things, right? Okay, so this could be the second reason why, if let's say really Republican is not going to win and the market is going to go down. Okay, market is going to go down because when the newly president comes on board, right? Is it going to be business friendly? Is it going to be a pro business? Is it going to change the policy? We will know, right? Okay, so the market will react first. Yeah, but no matter what, right? You can see, okay, after that, after the first year when they are re-elected, is not going to be good, but subsequent year you will still be good. Okay, if the Republican is going to be re-elected, you'll be good, and subsequent year it will just be normalized again. Yeah. So no matter what, I think looking at the long term, looking at the long term, okay, if let's say this is going to be a dip, no matter what reason, if it's going to dip, I think this will be a good opportunity. So to sum up, right, the two possible reasons why the market will go down, it will be either if the economy is going to shut down again and who is going to win the presidential election, right? Now, knowing all this is useless, most useful is what will be your investment decision. So I purposely created a chart. I thought it will be, very clear. Huh? So for those people who are really bought, if the market go down, what can you do? If the market go up, what can you do? For those people who haven't buy, right? If the market go down, what can you do? If the market go up, what can you do? Correct. Okay, so let's say you're buying into indices. I'm just talking about indices and individual stock. Those gold, what Bitcoin, I'm not going to talk about it. Okay, so if let's say you're really bought into the market, and if the market goes down, you should consider buying some more, especially if it's indices. So those ETF are indices, in the long run, indices so far has been going up, okay, in the long run. So if it's going down, then it's supposed to be a chance for you to buy some more. Okay, if let's say the market now at the support level and then it bounce, okay, then do nothing, correct? Just don't need to do nothing because you're already in, right? Those who haven't buy, if the market go down, you can actually consider entry. No need to buy everything. Consider entry. Okay? Yeah, because there will be a chance, right? If not forever you want to wait and wait forever, you will never have any entry opportunity. But if the market goes up, right, then you do nothing. Okay, anyway, it's down already, just they haven't down some more. So if it goes down, if it goes up, then don't do anything, don't FOMO. After if you're missing out, then buy at a high, then become buy high, sell low. Okay. Now, if you're looking at individual stock, so let's say the market goes down and you're holding lousy stock, you have been losing money and it goes down some more, then I would suggest for you to reposition yourself into better companies. Okay, just reposition yourself into better. You already lose the money. You already have a losing position. Why don't you just sell your position and go and buy into a better company? It's just repositioning, All right, you'll be better off. Really better off. I know it feels painful, but when you do it that way, right? Okay, you will realize that you recover your loss faster. I don't believe you watched my previous last video. Okay, like a 10 episode that time. Yeah, and if let's say you're in a lousy market, if let's say a lousy stock, if let's say the market go up, you should consider profit take and buy into better companies. Really, yeah. And for those who haven't buy anything yet, they never don't buy any lousy stock now. Okay, so what do you mean by lousy stock? No story, fundamentally lousy, a lot of debt, that kind of stuff, right? Now, how about good stock? A good stock like maybe innovative stock, okay? There's a very good story behind, probably is going to change the world, okay? Or like Amazon and Facebook, possibility, right? Now coming down, then that could be considered to buy some more, okay? Or if Facebook then react, the dip is just temporary and then it bounce back up, then do nothing, okay? Now, for those who haven't buy anything, then you can consider buying Facebook if Facebook go down some more. Okay, or Amazon or Google, okay, especially those technological stock that go down in sympathy. Facebook is being hit, and sometimes the whole technological market, right, or stocks related technological related stock all will go down, right, together. They call it going down in sympathy. Then you should buy it because nothing to do with them. No, they will definitely bounce back. So this is the best time to buy, right? Okay, okay. If it doesn't go down, it goes up. Then if you haven't buy anything yet, don't buy lah. Never buy when the stock is going up. Always buy when there's a dip or when it's coming down. Okay, never buy at the high, never sell at the low. So if you follow this rule, right, generally speaking, investment will be much safer and you have reduce your risk. I won't say no risk, but you reduce your risk. Okay, so I hope you like this particular chart and make it very easy for you to make a decision and understand what you should do, what you should not do. I'm Jason Tan signing off. Thank you very much for watching and I'll see you again. Bye bye.